Hello everyone, welcome to the session. So in the previous session we have learned about what is a liability and the types of liabilities, how liabilities form part of the business's balance sheet and everything. So now we're going to see revenue. So revenue refers to, like I said yesterday, the last session, sales refers to whatever the company sells to the customers, whether it is a product or a service. If the company sells a product and receives some consideration in turn for that, or if the company provides a service to the customer and receives some consideration in turn for that, it is called sales. And sales can be denoted in two ways: one, the number of units sold, the number of units of products sold to the customer, and two, the value of such units sold to the customer. Okay, so revenue is just like that, except revenue will include all kind of income that a business earns, whether it could be about selling a product or providing a service, or if the company gives loan to someone and that someone pays interest for that loan, or if the company has rented some of its machineries or ideas to someone, and if that someone pays some consideration each month or each year or something like that, that's called royalty. And if the company has a building that it has given out for rent, and if the person who is staying in the place is providing rent, if the tenant is paying rent, for that all of these income, any and every income that a company receives, it will be called revenue. And the revenue includes sales. Sales is not the only revenue. A company can have other forms of revenue, and another word for revenue is income. So that's what I said: any and every form of income that a company receives through selling of its goods or services, or as a commission, as an interest, dividends, royalty, everything is called income. Expenses: costs incurred by a business in the prospect of earning revenue is known as expenses. So whatever the company has to spend to earn that revenue is called an expense. For example, let's say you are a trader and you buy and sell goods, and let us say you buy and sell shoes. You're buying shoes, 10 shoes worth 2000 rupees each, so you're spending 20,000 rupees to acquire the shoes, and then you're selling the 10 shoes for 30,000 rupees. So now your sales is 30,000 rupees, your revenue is 30,000 rupees, because your sales is your only revenue, and your income is your profit is 30,000 minus 20,000 equal to 10,000 rupees, and your expenses are 20,000 rupees. Your profit is 10,000 rupees and your expenses are 20,000 rupees, because you have spent 20,000 rupees to acquire that revenue. So any and every cost incurred by a business to earn whatever the revenue there is. If you are building building up a warehouse or something, and then you are giving it out for rent, the cost that you have incurred to build that warehouse will be called an expense, because afterwards you are going to use that warehouse to let out for rent, and you are going to receive some kind of revenue from that warehouse. Therefore the cost of building that warehouse is a expense. Generally, expenses are measured by cost of assets consumed or services used during an accounting period. So yes, cost is nothing but cost of assets consumed. Whatever the assets you have, or services that you have acquired from someone else. So you can buy assets from outside also, there's no problem. Whatever the cost that you have incurred will be called expenses. The usual item of expenses are depreciation, rent, wages, salaries, interest. Yeah, likewise, if you are paying rent to someone also, it's a cost, it's an expense. The electricity bill that you're paying, the telephone bill that you're paying, the wages that you're going to give it the workman that is working for you, all of these are expenses. Expenditure. Expenditure is a similar term to expense, except that there are a few differences. Spending money or incurring a liability for some benefit, service, or property received is called expense. So, whatever that the companies has incurred as a cost for acquiring some benefit or property received. I mean, expense could be done in daily day-to-day activities of the business, which means that if the company does something to increase its revenue or to start earning revenue, it is called an expense. But if a company does something that to increase the value of its assets or property or service, it is called expenditure. So payment of rent and salary, these are all the same. Purchase of goods, purchase of machinery, purchase of furniture, all of this includes increases the value of asset that you have. For example, if you already have 10 crore rupees worth of assets and you're purchasing a machinery for 1 crore rupees, then it is an expenditure. You can say that the what you have purchased is an asset only, right? But yes, but since our accounting is a double entry system concept, if there is an income, there is an outgoing also. So the what you are earning is an asset, and what you're spending is called expenditure. And likewise, machinery, furniture are examples of expenditure. There are two kinds of expenditure. So if whatever you are acquiring is exhausted, it is being used within a year, it is called revenue expenditure. Revenue expenditure will include your petrol expenses, your electricity bill, so your rent that you're paying, or the royalty that you're paying for other companies. And if you are acquiring other vehicles for by means of lease, for a 6-month lease or a 3-month lease, something like that. Or if you are making an expense, if you are buying if you are overhauling your machinery, and you are supposed to do that each and every 6 months. Overhauling means nothing but repairing and renewing your machinery. So if you are doing that expense every 6 months or so, I mean, the companies do that to make sure that the machinery runs without any interruptions. So if the company is doing that and it has to incur the same expense or same amount of expense within a year or maximum for a year, it is called an if that expenditure is called an expense. But at the same time, if the company does incur an expenditure, and that expenditure the benefit of the expenditure would last for more than a year, it will be called an asset. For example, instead of overhauling a machinery, you can buy some new parts for the machinery and add it to your old machinery. That will increase the asset value of the machinery, right? So you do not have to buy parts also. If you're buying new machinery also, it's the same. You can buy new furniture, whatever the cost incurred. If the value of that product lasts for more than a year, it will be called asset.